Big Ben begins his two-day testimony on the Hill today at 10. European stocks and U.S. futures rise as investors speculate that Bernanke will hint at further stimulus. Gold is up ahead of the news and the U.S. dollar is down against the euro. Earnings continue with Goldman Sachs, Yahoo, and J&J reporting today. I'm Brittany Umar and the morning call starts right now.
Good morning, I'm Scott Rell, the Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. Well, after a fairly volatile trading session yesterday, the markets did end negative on the day, but it ultimately did not appear to be so damaging.
I think overall, anyone that was looking for a continuation or commitment to Friday's move had to be happy yesterday. You know, we always come in after a big move and we say, what kind of commitment, what type of sideways digestion could we see? And if you look at the chart here of the overall S&P, you will see that, you know, on Thursday, when it looked as if we were going to break this intermediate trend, we held it. And then you had JP Morgan come out with some news and actually some decent economic numbers, and pow, nice igniting bar. So yesterday you came in, and what did you want to see? You wanted to see some commitment. So the way I measure commitment to a move like Friday is you want to see what level we hold. And yesterday we talked about support 1, 2, and 3, and yesterday support 1 held. So we went sideways, digesting this two-day move, about 30 handles off the low, and now we're coming into a small little trend line here. Futures are up 4 or 5 handles. I would say right down 1357 on a micro level, because if we clear 1357 and close above it, next real level doesn't come into play until about 1375. So those are that's like the micro / intermediate level there.
Now, if you expand that chart to a little bit longer term, do you see any similarities with what we saw last summer?
It's almost chilling that the similarities are so close, because if you remember going into July 4th, you know, we had that tactical squeeze. A lot of people were saying, you know, the news is so bad, we're going to go lower. Everyone was short. P.S. You know, we had end of the quarter markups. We had new money flows into July 4th, and then you had the EU summit. You had all these things that helped ignite a rally. And then, you know, coming into where we are now, last summer was the same situation, and then we hit our summer top on July 21st. So there's a lot of technicians pointing out that don't fall asleep behind the wheel, because it could easily happen again, you know, especially if we don't get what we want to hear at a big bend. So if you go take a look at the chart here, you will see that, you know, let's go back to last summer. Let's take a bit more of a macro look here. And you'll see that last year we had big time support, right? We started coming in, big time support in May, June, July, rallied back up through July, and here we put a lower high in right into this resistance, and this date was what? July 21st, and then after July 21st, you couldn't find a friend for an entire month. It broke every level. It broke this rising trend line. It broke this major support, this head and shoulders top pattern triggered, and we went all the way down, and August, September were horrendous. So fast forward to where we are now, you know, I'm not saying it could happen, but you just got to be aware that we're coming back up. You still have resistance right here. You have the high that was set in April, another high that was set, you know, later in May, and now we're coming up. Will we make another lower high here? And if we don't get what we want out of the Fed because all the data and the news flow is so weak, are we going to just fall off a cliff? So, you know, people are anyone trying to cheat ahead of this could get hurt, because if we did break this downtrend and continued higher, you better believe if you're short, you're taking for a ride here. But you also can't just be like, you know what, we're making higher lows, you know, things are okay, Big Ben could save the day. So at this point, be involved. I'm going to be tactical. I'm not taking a portfolio approach right here. I'm going to try and do some kind of sniper, make some money, tack it on so I can enjoy the summer, because there will be better times when the market could trend, but I don't think that over the next, you know, 1 to 6 weeks is your time to have heavy exposure, whereas, you know, it could get a little bit tricky in the sessions near to come.
And you mentioned Big Ben, so we have to address, of course, he does speak on the Hill today at 10. It seems as though it's not a question of if they will act, but when. Right. Will it be August? Will it be September? What could he say that will lift the markets today?
I think that he alludes to the fact that it's going to be in August, okay, and not September. Because if he doesn't change his language, and if he doesn't show the when versus if, you're going to see this market sell off. Why not? Because we're on the hopes that we're going to get more QE, that everyone's saying QE3 is just a matter of, like you said, Brittany, whether it's going to be in early August, like August 1st, right around the corner, or September. So lately, by him just saying it's in his back pocket, the market's acted well at this point. I don't think the bazooka and the jacket trick's going to work anymore. He's going to have to fire a few bullets because, you know, I don't think it's going to work otherwise. So we'll see what happens.
All right, well, let's put the spotlight on retail right now. It's been a real mixed bag of haves and have-nots. Let's start with your stock pick of the year. Let's talk Walmart. Of course, has been one of the leaders in the sector. It's far away from the key moving averages right now. Will we see it pull back?
I think at this point, it's almost at the measured move we put forth on CNBC back in December 29th. I had a great segment with Sully talking about Walmart, and everyone's like, it's a dog. It hasn't done anything in a decade. And I'm like, that's why I like it. It absorbed a huge move. Go check out the blog. This is my retail stock pick of the year. You know, if you take a look at it, the buy price was around 62 when it cleared this area. It's had an unbelievable run. It's coming already into the target area, so I would definitely take some off. At this point, I wouldn't short it or fight it even if it could go lower just because of the underlying strength here. But, you know, it's a little extended from the 8-day. It's extended also here from, what is this, the 21 days. So I would rather see you buy a dip here, but you don't get much of a dip in this stock. But it just shows you that, you know, you can be a stock picker. You have to know your time frame. Anyone that bought in 2002, pulling their hair out, they might not have stuck around for this year. But if you were in the 90s, you made sense, you made money. Same way with the actual stock market. I know that we've been tactically trading these ranges for over a decade now. There will be a point, whether it's this year or I think in the next 3 years, that the S&Ps break out of this range. And if you're someone our age, you know, we actually can have a long-term tactical plan, putting money in every single month. Whereas the baby boomers, unfortunately, you know, they did their long-term plan of the last 15 years didn't work out. If that was it. But anyway, let's go back to retail. I'm getting a little
Stay on track here.
Stay on track.
Let's talk another strong name. Target has cleared all pivotal resistance levels. Can it keep it up?
Well, this is another reason why you have to watch what goes on in the stock market. If Walmart is doing so well, you know, why isn't Target going to follow suit, especially if it has a strong chart? And lately, you know, in the last 2 weeks, we started putting Target in off the charts. I think a week and a half ago, I was on Lunch Money with Dominic Chu, and I gave him an option strategy because I liked the chart. I'm like, if you like the chart, you know, I know everyone's saying retail sales is going to be so horrible. Oh my goodness, 3-4 months in a row. Didn't affect Target. So I'm like, if you want to just have the option strategy to be in the game, quote unquote, you know, buy I think it was a 57.5, sell the 60s, and you got 150% on your money. If you wanted to buy the stock, you look here at the chart. Wasn't brain surgery. All it was a nice descending channel where the moving average started curling up. Here was buy area number 1. Here's buy area number 2. And then yesterday we updated and said take some and trail some. It was downgraded today. Let's see if we could buy this stock a little bit closer to 60. I don't think the move's over this year.
Well, and then there are the have-nots. Poor Lululemon, downtrend still remaining in control, trading below all key moving averages. What are the next stops in the downside?
This is a pure example of how things change. When things change, you change. We trade real time, and if you've been in Lululemon for 3-4 years, you like the stock. If you bought it and chased it lately, you're like, oh my goodness, these nice shorts I wear that doesn't chafe on me over the weekends is not performing well for my bank account. So if you look here at Lululemon, you will see that this breakout failure was one of your signals to sell some strength. Any stock that breaks out and comes right back in is not ready. That's a sell signal. Then another sell signal was when it broke. Actually, you could say here, if you stood in with on earnings long term, when it gapped down and never filled the gap. And since then, it's just been working lower. It's below all the moving averages. It has a lot of technical work to do. Even if it comes out with a good report this quarter, I think it's still going to need time. So at this point, you know, it's locked in this downtrend. It's just following this suit. At some point, maybe it's worth a bounce if you sold it correctly here or you didn't take it into last quarter's earnings. You know, there will be perhaps a dip to buy, but right now, technically, it doesn't look good.
And sticking with the weaker names, Under Armour continues to struggle. Will it be able to break through that $48 resistance level?
At this point, it's like it's acting a little bit better than Lulu. You look at the chart here. You have the support. It held at 200-day. It didn't break below it like Lulu did. It's coming right into resistance. I don't know. I think guys are looking for another trade. If you can get above this 47.80 or 48, I think 40 you just mentioned, it could continue. But I still think this stock has a lot to prove, and I guess you have to wait to see earnings. But I wouldn't be holding this into earnings just because that's not what I do.
Coming up, we're going to go in the trenches with tech stocks. But first, a quick commercial break. We'll be right back.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, we're back and talking about tech stocks. A lot of big caps reporting earnings this week. Let's start with Intel reporting today after the bell. Semis, of course, have been weak. Could Intel possibly be a catalyst?
I need to see what happens with the report. At this point, a lot of people have taken all expectations down. The technical action in Intel has been getting weakening. We came in the beginning of the year, there were some tactical trades. Actually, it was one of my 13, 14 positions in the first quarter when you were able to hold positions for a lengthy period of time. If you look here at the chart, you will see, it had a nice trend it was following, and then it broke above this area right here. What was it, about 26? Continued, then look what happened, breakout failure. I was just showing you a breakout failure in LULU. Obviously, it happens in any sector. It doesn't matter what chart or stock it is, but so here you had a breakout to get engulfed right there. That was your small sell signal, and then once it broke this little trend line that was intact and traded below it and retested, that was your sell signal. So now down here below the 200-day, it's always hard to sell after a big move. So at this particular point, I think that all they have to do is meet. All they need to do is meet earnings, and you'll get some type of reflex rally. At this point, I think the street's thinking they're going to miss and thinking they might even guide down because of the slowdown in PC demand. At this point, I have no position. I would say hopefully you sold it already. If you are looking to play some type of bounce in this stock, I think I'd rather see you take an in-the-money call just so your risk is premium paid. If you want to buy it for the longer term, if you're in it, if you buy it here, I guess it's better than buying here or there. But the next big support is down here at around 23. But overall, I do think if the report is bad and they do gap it lower, I think that it could be priced in and it'll be a reversal, and then that's how it'll play out. So tomorrow morning at the morning call, we'll talk about where it's trading. All
right, and eBay trading back to the lower end of its range, potentially indicating a lack of confidence going into earnings on Wednesday. Could we get a bounce there upon a good earnings report?
Last quarter they came out, it was a great report. It gapped up, it held in well, it was one of the go-to stocks, and then recently, in the course of the past, I would say 4 weeks, it tried to break out, and what did it do? It did a breakout of failure, just like everything else in this market, because we're not in a rip-roaring momentum tape. So if you look here at the chart of eBay, you will see this is what happened last earnings. It gapped up, and then it was just choppy, choppy, choppy. It actually gave you like one really good trade right here. It was for a day and a half. And then you broke out, and then it just came in, and then it really should have held this if you were going to get more upside. So now at this point, it doesn't look like people also here are pricing in an unbelievable report, as it's already came in to the bottom of the range. So it's basically trading exactly where it was last quarter after its earnings, and it's now a quarter later. So at this point, you have to be a macro eBay investor to stay in it for earnings, because I do think that it is prone to some type of lukewarm report. But at this point, it's not pricing in a beat with whisper numbers, the whole 9 yards, because you just pulled in from 44 down to 38.60. So I think it's a bit safer to be long it, but I'm not taking positions, because if it does not come in and it does miss and guide lower, the 200-day right here is down to 36.40.
Qualcomm also reports earnings on Wednesday. The downtrend has remained in control here. Is this an avoid heading into earnings?
This too was something that was one of the positions we held when the technicals looked up, when we were able to hold positions in the first quarter. It broke out, and then little by little it just got technically weaker and weaker and weaker. So if you look here at the chart of Qualcomm, you will see that earlier on, remember this earnings gap right here, this is when we started to get back involved in Qualcomm, saying you had an earnings gap, it never filled it, you didn't have to take it long into earnings, you could have bought it here, and then slowly but surely it had a really nice move until pow, big, I think this was a downgrade here, and ever since then it's been trending lower. So at this point, this too is below all moving averages. It doesn't look like anyone out there is thinking that Qualcomm's going to come out with any kind of blockbuster report. You do have a downtrend coming into play here, so if it is decent and it opens up above it, it could start another move. So I'm going to wait till after earnings. I don't think you take Qualcomm into earnings. As a macro investor, you're probably out of it, especially when it broke this level. This was really a big level right here. That was what, 61? So if you sold 61 and you're a Qualcomm fan and you have a thesis that it has to go higher, I guess you could buy it 6 points lower. But as of right now, it doesn't look great. But maybe there'll be a trade after earnings.
Also on Wednesday, IBM. Looks like there's some pessimism about IBM heading into earnings. The stock showed weakness yesterday, closed down. What's your strategy with IBM?
it's sort of similar. I hate to be like a broken record here, but this also is one of the positions that we held for multi-months as it was working, and then it started to show faulty action. If you look here, I like to trade with chart patterns. With chart patterns, this is when it was really, really tight. You had a nice breakout, remember, above this 190-ish and change, and then you had some follow-through action right here up until 210. I think my whole thesis was 205, so I didn't stick around for that. And then, as it came in, I started talking about how weak Europe was, our whole public sector, how IBM could be exposed to it, this and that. And, it's been a weaker stock, below moving averages. I think people are thinking that it's not going to be a great quarter, and I don't think it's going to have a great quarter either. So at this point, I know last quarter they mustered everything they could for a good quarter, and it was fine. I just don't know how they could come out and have good quarter, great guidance when they have so much exposure to Europe and a lot of exposure to our public sector. So I do think you have to take a lot of caution going into it. But again, it's pulled in off the highs. So the question is, will the street give a pass to some of these stocks that have already pulled in a decent percentage off the highs if they miss? So that's what I'm going to be looking to see, and that trend hasn't been set yet through this earnings because we haven't seen enough earnings out yet where we know whether or not a disappointment's priced in or not.
Now, Apple reports earnings next Tuesday. Action has been choppy here, so does it have room to climb before earnings?
Yeah, Apple usually tries. It has a few different ways that it goes about it. At this point, it's kind of in the middle of a noisy range. A few weeks ago, we talked about buying it above 590. Last Thursday, it came back down and retested 592. Now it's just hovering. So I don't think it's going to make a big move one way or another until earnings. If you look here at the chart, you will see very healthy, a lot different story than the ones I just showed you. It's above the 50-day, above the 21-day, above the 8-day. This is when it traded above 590, had a nice move to almost 620, came back, retested, bounced off it. And now I don't think you're going to get much over the next few days. So you have this small channel to watch it. Yesterday was a nice little day trade. I think a lot of guys, that's where I made my money yesterday, as it traded above, what was that, 607, had a nice little move to 611.62. So still above the 8-day. It's above the moving averages. To me, this is one of the best acting high beta names. Just the question is, when they come out with their earnings next Tuesday, what's Mr. Cookie going to do? Is he going to lower everyone's expectations like Steve Jobs used to do, or is he going to come out like the other time and say that everything's running really smooth, our product line is awesome, because that's what I think what he said last time. And if he does, this stock's at new highs in a New York minute. And I do think as a macro investment, stay long Apple. As a trader, you must have it on your radar when it tactically sets up, and right now it's not tactically set up.
And Google reports earnings on Thursday, not too long after the departure of Marissa Mayer heading over to Yahoo. The stock continues to be a laggard, so what's your strategy here?
All right, I have to be fair, because this was my high beta name besides Apple, which everyone knows that I love, and it hasn't acted well. You've had 2 quarters now where it's just they've missed. The first quarter was a real surprise, and that's when you had the gap down. If you look here at the chart, this is when, first of all, remember breakout failures I talk about? Well, this one was a definite. Okay, this is when I talked about it. I looked at the big channel, almost like Walmart's channel, but this one broke out and failed. So I actually did not have stock into the earnings because I always still don't take it. I usually take options. And you had a big gap down. Remember at that point it held the 200-day, came all the way back up. Again, bad earnings, or earnings that weren't so hotsy-totsy, and boom. And then it broke this support, so this was a way out, and now we're hovering. It's holding above this 555, 560. If Google is not good, if they can't get a good report and all eyes are going to be on them, this stock's going to be 480. For me, I'm going to be toying with the fact that I might, just because everyone's starting to kick them to the curb and say Google is just not the same Google it was, that I might go with just some in-the-money calls. Just because if they do come out and it's strong, you could see a 40 to 50 point gap up, and then it's right back in the game. So for me, I'm not going to take the stock into it. I'm going to take in-the-money calls, or maybe do a call spread to help finance it, but tune in on Thursday for that. But I'm not going into the puts. I'm not changing the thesis. All I'm saying is if you don't want the risk tolerance, technically it hasn't been working out well, but if you want to be in it for earnings, we'll do it with options, not stock.
Okay, quickly, Amazon sold off with the broader market yesterday. What are the levels to trade against for quick cash flow?
Quick cash flow, I don't think there's any in Amazon this second. There was some quick cash flow. Ascending channel broke to the downside. Now I think it's a waiting game. It's just going to be small little micro moves. If you look here at the chart, you will see last tactical play was when it did break this ascending channel. We talk about descending channels that break to the upside. Well, ascending channels typically break to the downside. And now it's trying to hold here, but it's also holding below this broken trend line. So moving averages starting to curl into it. It could get some follow-through downside ahead of the earnings. And I think today there was a downgrade, more cautious comments about their quarter, which I think rightly so. Last quarter they did all they can to get a nice big gap up, which was tradable. But at this point, valuations are high. Amazon has to keep proving themselves. They have to have a strong quarter and great guidance in order for it to take out this 240. So at this particular point, I would be very careful. Again, here I would take options unless you've been in Amazon for 5 years or so and you don't care if they miss because you have so many gains that you don't mind giving away some. But I don't like to give away any money. So make sure you're hedged a little bit, sell some in the money calls, grab that premium, get to that strike price protection, even if you're a long-term shareholder.
And Facebook in its longest slump since its IPO. What are the next key levels to watch here?
See, Facebook is an example of you can have a setup, okay, and look for a move and be wrong. Yes, we are traders. We are wrong. I am wrong a lot, but it's how you are wrong. It's how you treat your thesis. It's how you treat your strategy. Do you get stubborn? Do you, say, oh, I'm going to be right at some point. I'm just staying the course. Because with Facebook, if you remember, we had the red dog reversal, 25.76, great buy strategy number 1. Buy strategy number 2, above 28.10. And then it started to put together that cup and handle pattern, but it was a little bit short. Usually it takes 5-6 months for a cup and handle pattern, not 6 weeks. But with an IPO, especially one like Facebook, things happen quicker than you would think. So it made sense. Kramer did a Mad Money off the chart special with it because it could have worked, and it didn't. Big deal. You take the trade off the table. The strategy was be in it as long as it holds above 30.55. I even tweeted it yesterday morning, say breaks 30.25. I'm out. You look at the chart here. It was worth a try. Here was that 80-20 trade right here when it reversed. That was great buy strategy, worked then. Here was another one when it clicked above 28.10. And then right around here, it looked as if it was going to try and get above 33.40. So the strategy was if it gets above and stays above 33.40, it's in motion, it's a buy. If you want to anticipate and buy it in this channel, you could do so, but just do tier 1 and have your stop here. This was a stop. It was 30.55. I said I'm not going to just let them tail it through. I'm going to wait till 30.25. So I got a 30.25, and it closed at 28.21. And now I'll potentially try it again if it works out. But at this point, I'm not going to just start buying it because I was on TV saying I think that Facebook could trade through this and be on its path, because at this point, it's not.
And finally, Netflix down yesterday, but seems to be holding this higher level. How likely is it that we'll see higher prices going forward?
This one's trying to hold in well. It had a nice strategy when it went above 70.50. It went about 15 points, and now it's flagging. I tried to be long in the flag, but I think I'm just going to wait. I'm not going to try and anticipate, because if you anticipate, sometimes you're in early, and if you're in early trying to be ahead of the move, it doesn't always have to happen, and you can get hurt. So anyway, if you look here at the chart, you'll see this is when it ignited above this 70.50. Nice 2-day move, and ever since it's been consolidating and flagging really nicely. So if you do have a risk tolerance, and you need to have risk tolerance to hold stocks, okay, you could be long versus the low here of about $80. So your risk, you have about $3 stop. If it starts to get above 86.65, you could see continuation, because right in front of you, you have a gap at 90, because once it goes into a gap, you get squeezed, there's an exciting move. That's why traders will be focused on this, because anytime you could potentially fill a partial gap, it moves quick, and we like immediate gratification as traders. So keep it on the radar, but I have a feeling it's not going to ignite or do anything until after the earnings report, not before.
All right, and of course today we have a slew of economic indicators, earnings reports, and Bernanke's testimony. So what is your focus heading into trading today? I
think the future's up 4 or 5 handles. We're at Friday's high. I want to see what kind of market movement we have once he starts speaking at 10 o'clock. I think expectations are high. We'll see if all of a sudden he starts speaking and he doesn't allude to anything more than just saying, hey, look what I got in my pocket, versus taking it out. You could see some sell-off, so I'm going to watch that like 1355, 1357. I'm going to watch the spiders to see if it has some kind of push-through failure. You know, potentially it goes through this early, squeezes some shorts, and then fails and puts that tail in. If it puts a tail in, maybe I will short the spiders, considering the size of the move. We have to put a tail in down here. So at this point, here's your just a don't pass line. If it passes it, you're going to see a squeeze, and then we need to see and make sure that it stays above it as Big Ben speaks. And then once he's done, we'll have to look at earnings, and that'll be a lot more stock specific.
And with that, happy trading, everyone. Have a great day.